auto sector and bring in our pro panel, Ross Gerber, President, CEO of Gerber Kawasaki Wealth and Investment Management, and Pedro Palagiani, Research Analyst at Global X ETFs. So I look forward to talking about so many names. Ross, I'll start with you. You've always seemed to like Tesla. You were a believer in Elon Musk. You know, Tesla has since pulled back off the 1,000 and 900 and 800. It was in the 700 range in my last check. What are you thinking here on Tesla, Ross?
I mean, nothing's changed. I mean, Tesla's doing phenomenally well. I was just in Austin, and the factory's going, and it's an amazing investment in America and EV production. And the biggest issue Tesla faces right now is getting Shanghai production back, which we're hoping next week is going to happen. And that's really the one thing that's been tough is Shanghai. And so I think it'll be a hugely bullish thing when Tesla says they're back to full production in Shanghai. That's our major concern.
Right. And Ross, you never really gave too many price targets. You always said you liked Elon Musk, you liked the concept of Tesla, but you never went out on a limb and really said, hey, you know, it's at 700, I think it's worth 1,000.
What do you mean? I say it on your show all the time. I say it on your show.
Yeah, you think it's going to 1,000?
If it's under 1,000, I buy it under 1,000, and it's under 1,000, okay. So I buy it, you know?
Oh, okay. All right.
Yeah, anytime Tesla's below 1,000. I mean, the fact that Tesla's below 800 is a very unique opportunity.
Okay, Pedro, do you agree? Is Tesla below 800 a unique opportunity?
I mean, Tesla is clearly one of the leaders and probably will continue to be over the next few years. One of the things that I like the most about the company is first, their 50% average annual growth rate in terms of vehicle deliveries. That's definitely top notch in terms of growth for a car company, but also looking ahead, new revenue sources for the company like FSD Beta, their full self-driving capabilities are now going to start to generate these new revenue streams for the company. Very much like software as a service revenues that are very sticky, very profitable, and that's going to be very powerful for the company moving forward.
Yeah, and I do want to talk about the lithium and battery tech ETF and the electric vehicle ETF in a moment, Pedro. So hold the thought. I'm going to ask you if those are buys. But Ross, as you look at some of the specific names here, Lucid was cut today. GM and Ford got double downgrades. But the truth of the matter is you still have elevated prices for autos and used autos. You still have demand for EVs. I don't know how much demand. Is it are people overestimating how much people will want EVs in the future? What are the clear winners to you when you look at the group?
Well, first of all, EV demand is unbelievable right now. I mean, I've never seen such demand for any product, but a lot of it's driven by the fact that oil prices have gone through the roof. And for a typical consumer who doesn't drive an EV, this is a much more costly environment than somebody who does drive an EV. So we're just seeing incredible numbers for all the EV makers that can make EVs. The question is, can you make the EV? And that's where I think most of the companies have failed, especially Lucid and Rivian in particular, that really just haven't been able to make EVs. Ford has done it in some limited quantities. And so I think the real challenge is, can we make cars? When you downgrade Ford and GM, I think that's based off their traditional car business, not their EV business. So I think right now there is no better business to be in than the EV business if you can make EVs. And right now, Tesla's the only one, and Polestar is the only one that can do it in scale.
Oh, do you like Polestar?
I love Polestar.
Okay. And so, yeah. Pedro, get back to Lit and Drive. Are those two ETFs that you would buy into today or in 6 months or when?
I mean, Ross was talking about the opportunity, right? Like, it's clear that the shift towards electric vehicles and autonomous vehicles and even shared economy is unstoppable at this point. So Ross is right. The winners are setting their foundations today in terms of capturing the opportunity. And it's not only about can they make electric vehicles, but can they get their hands on the key raw materials to build these electric vehicles? And that's looking at LIT, for example, the Global X Lithium and Battery Technology ETF. That's exposure that we're trying to provide to the companies we within the supply chain of electric vehicles that are exposed to benefit from the rise in electrification. If you look at some of the holdings, you have companies like SQM, Ganfeng Lithium, Albemarle, all of these leading lithium players are benefiting from the rise in lithium demand. At the same time, you have battery technology companies like CATL, LG, Panasonic, all of these companies that are working with pretty much all of these traditional OEMs and pure play electric vehicles. So clearly a nice ways to capture the growth in demand for electric vehicles.
Got it, got it. So that demand is there. And just like Ross was saying too, that both of you agree that there really is this demand for electric vehicles, particularly with the rising costs in oil, which has been very evident. We'll see whether or not we can get the charging and get the products we need to make those electric vehicles. That's another story for another day. Ross, your thoughts on Elon Musk? Is he real about his Twitter offer? Most people think yes. Is he staying on with Tesla? Most people think yes. But are there wild cards that you think would really you'd make some stock moves if something were different?
So, truthfully, I can't talk about certain things now with the Twitter deal. So let me just make this very clear. Elon Musk has every intent on buying Twitter. He is working very, very hard right now to buy Twitter, and he's putting together an amazing group of investors to do this. So I don't think all the stuff you see in the media or on Twitter and this and that, you got to take it with a grain of salt. When Elon Musk wants to do something, he succeeds. So I think betting against Elon is a very, very poor decision. And right now, with where Twitter stock is trading, it's pretty much what Elon was buying it for. And with a $54 deal on the table, the risk reward seems very, very good if you're a believer in Elon Musk. So with that said, hopefully we'll be able to be a part of this deal.
Exciting stuff, Ross Gerber. And we're not the regular media. We take our time with this. Ross Gerber and Pedro Palajani, thank you both.